Despite the slowdown and the decline in the economic activities due to the outbreak of the coronavirus pandemic, figures presented by the central bank show that outstanding credit to the private sector increased by 4.3% in the first quarter of 2020. However, there had been a significant drop in new authorized loans by 10.6% compared to the same rate in the first quarter of 2019. We did not have any problem in the first 2 months. We issued a big number of authorized loans and the trend was going high compared to last year. But there was a drop of about 10% in March when the first case of this pandemic was confirmed in Rwanda. The central bank's quarterly monetary policy committee meeting also decided to revise downwards its key repo rate from 5% to 4.5%. In the statement, the decision aims to spur lending to the private sector to support economic recovery amid this novel coronavirus pandemic. The decision is also unusual, owing to the fact that there is a general increase in the price of commodities and trade deficit deteriorating by 18.8%, owing to the higher imports compared to exports. Governor Rwangombwa explains why the central bank reached its rare decision when inflation in the first quarter stood at 8.2%, driven by food and energy inflation.
Ubundi muri inflation turimo umuntu yavuga ngo ntabwo twagombye kugabanya urwunguko rwa BNR.
One would be right to say that during this inflation, it is not wise to revise downwards BNR's key repo rate, but the inflation is expected to slow down from 8.2% at the end of this financial year. We expect that in the fourth quarter, inflation will be at 3.4% and to decelerate further to 1.1% next year. We have to take strong decisions now to make sure that the inflation doesn't go below 2% in 2021. Yet still, it is our responsibility to support economic recovery that has been affected by COVID-19. Banks will have enough credit to support businesses, which will require loans to revamp operations. In a phone interview with the chairperson of the Private Sector Federation, Robert Bafakurera, said that the federation welcomes the central bank's decision, for it will help businesses to rebuild during the aftermath of the COVID-19 crisis. Businesses normally operate on bank loans, but due to coronavirus pandemic, the central bank recently advised banks to restructure loan repayment. It is understandable that commercial banks will not have enough liquidity due to the changes caused by the coronavirus. Reducing central bank repo rate can be seen as a compensation for the lost cash from the delayed loan repayment. In March, the central bank also lowered reserve requirement ratio by 100 basis points from 5% to 4% in order to allow banks more liquidity to further support affected businesses. This availed 23.4 billion Rwandan francs lending facility for businesses to borrow from the commercial banks, in addition to 50 billion Rwandan francs facility put in place by the central bank that commercial banks with liquidity challenges can borrow from. Reporting for RwandaTV News, Athan Tashobya.